What's going on, you guys? Welcome back to another portfolio update. In this video, I'm going to cover all the moves from today. I bought some calls, I sold some calls, and I rolled some calls. I'm going to be speaking a little more quietly today because it's very late, and I'm going to put this video out actually tomorrow. So if the Smash Squad could go ahead and gently smash the like button, that would be greatly appreciated. All right, so today's account was up 1.2% to 263,000. Some nice movers in the account today. Amazon was up a nice 3.7%. I found on Amazon that I think this was the reason why. So Amazon turns to Anthropic's AI for Alexa revamp. So it looks like Amazon's revamped Alexa, due for release in October, ahead of the US holiday season, will be powered primarily by Anthropic's Claude AI models rather than its own AI. So that looks to be sort of like the bullish catalyst for Amazon today, especially with the holiday seasons coming up in the next few months. So Amazon already back up almost to 180. So it was down in the 150s not too long ago. Tesla up, nice day, almost 4%. Palantir holding strong, 1.5. Shopify, 1%. CrowdStrike was under $200, or right around $200 only a few weeks ago, up 2%. And Riot down 1.9%. Cash is now sitting at 3,077. So the first thing I did today in this account was I rolled 5 Palantir covered calls from 18 to 19, and I paid a debit of 347. So even rolling these out from 9:20 to 11:15, I still had to pay a debit. But that's really because it was 5 contracts that end up being 347. So if you look at it, that's under $100 each. So not too bad, because it does qualify me for another dollar of capital appreciation. And obviously, it's only at 19, so I'm going to be rolling these for the foreseeable future. But that's why it's important to continue to buy a stock on the way up. So I've still got like 600 or 700 more shares of Palantir staggered all the way up that I can also write calls on, because I think 25 calls and 32 calls as well. And then I sold a call for 185 on Amazon. Selected October 4th as the date and collected $297 in premium, and the strike's 185. So feel good about that. If Amazon pushes up to 185 by then, which is definitely possible, those shares are definitely going to be looking good. Amazon being my largest position. So if we add, if those go up to 185, that's definitely going to be looking good for Amazon. One thing I'm going to do, starting a new segment every Friday, is just quickly doing a quick portfolio stock review of each position and what I'm looking to do. So let's see if we can go from, let's do highest market value. So Amazon, pretty happy with where I'm at. 400 shares, largest position. Average cost is 125. So I'm pretty set with that one. Tesla, got 200 shares, average cost 198. I could see myself adding another maybe 10,000 max if Tesla were to get into like the 175s. But otherwise, I feel comfortable with the Tesla position. Microsoft, 100 shares at 281. That one is set. I don't really want any more Microsoft, because it's, realistically, is Microsoft gonna, double from here? No. So that's just one of those steady Eddie type of pillars in the portfolio, but I don't really want to make it any bigger. Palantir, average cost 1461, up 115%. I could definitely see myself getting this position to 50,000, probably over the next year or two. So just like I have been, each Palantir dip, definitely been adding like, $2,000 here, 2,000 there. And that's how I'm going to build that position. Shopify, we're up now 10%, 443 shares. This one, same thing. I'm looking to build this one maybe to 45 to 50,000. I really like Shopify over the long term. CrowdStrike, this one's pretty much done. I don't see myself adding another 100 shares in order to, be able to sell another covered call. My average cost is 119, and so that's pretty much set. If it goes back under 200, then I will add. But right now, that one's pretty much set. Maybe just a nibble here and there. Meta is set only because I would love to get this to 100 shares. But, again, this is a mega cap, and, I'm up 21%. So I only made one buy of this, pretty much caught the exact bottom on the last Meta earnings dip. This would be 2 earnings reports ago. And so it didn't, I put 20,000 into it, and it just didn't give me another chance to buy. So holding that one for right now. Enphase, I'm looking to sell the last 100 shares over the next few months. I do have call on it at 110, so I'll either have to take a loss on the call or a loss on the shares. So we'll just see with that. But I am looking to sell out of Enphase, and I'm looking to sell out of Riot. So when Riot gets back to 894, I'm going to go ahead and sell out of that one. Maybe next week I'll do a segment as well on Friday of stocks looking to make it into the portfolio. So this will be the first week adding this new segment. Just quick portfolio review, where each stock is, the cost basis, and, where I'm looking to take each position. Okay, now let's look at the calls that I bought. So I added another call to the Celsius 35 calls. So I really wanted to purchase 3 calls yesterday. But after I bought the first 2 calls, I kind of, let the market see what the market was going to do, because pretty much as soon as I bought these, the market started, going down. And so I said, okay, well, let me see if the market will come back up, or, if it bleeds out into tomorrow, which was today. And, so since Celsius had a nice rebound today, and by nice rebound, I mean it sold off a little bit. If we look at the actual Celsius shares, it was actually had a nice open, so it was up 2.5%, and then, sold off, and then had a nice rebound. So I liked that strength, and so that's why I decided to go ahead and add that third call today. So with this position, like I said yesterday, this position's pretty much halfway full. So if Celsius, starts tanking, continues to go down more and more, I'll let it find its next bottom and then add. Or if Celsius shows signs of recovering and starts making its way back up towards $50, then because of that strength and that reversal, that trend reversal, then I'll decide to average up. So that's how I'll do that. Keep in mind with these ones, the bid and the ask is fairly wide, so 1340 and 1405. So when I was actually selecting strike prices for this call, the liquidity is not great, and this one was actually the best I could find was 1340 to 1405. So this total return right now is minus 285, but this fluctuates some. I watch it throughout the day just because it made me curious. It would be like down 4%, and then Celsius would move up like a very tiny amount, and then it would go like up 2% in the positive. So the position was went from down 4% to up 2% on only a very small move in the actual stock. So that liquidity, is obviously messing with that, fluctuation. But overall, I feel good about this. I think once it breaks maybe 42 to 45, somewhere in there, then I can sell around a cover calls on there and get that poor man's cover call started. And then in this portfolio, cash is at 3,500. And the only thing we're holding other than the calls is the Ethereum 2x leverage, which we're down 5% on. So I actually decided to cash out of all my regular Ethereum mentally. I haven't sold it yet, but I've mentally cashed out of that. So if we look at the actual crypto portfolio, which is, let's refresh, which is at 96,700. So if we look at the Ethereum position, so I own $9,000 worth of actual Ethereum in this portfolio, but I decided to once, so I believe, I'll have to check, but I believe my basis on this is around 9,700. So I'm down about 700 in this position. Once I can recover a little bit of that loss, I'm going to go ahead and sell out of the actual Ethereum and then put that into the 2x Ethereum leverage ETF, because I'm just looking for every little bit of alpha that I can get. And right now, Ethereum's lagging. I think that's why it's a good point to start a position now if you haven't already, because right now Ethereum's a little bit out of favor. But do not be mistaken. Ethereum will have its day in the sun again this bull cycle. It will have some type of catalyst, and Ethereum will fly again very high in this bull run in the next 12 to 18 months. So if you're holding Ethereum, don't be discouraged. But if it is going to underperform, then I at least want to have safe leverage on that by putting it into the 2x ETF. For this portfolio, I'll probably be adding next week, depending. I do have the cash ready. We've got about, so basically I'm planning on liquidating the M-phase position, and that's going to go into some of these, and then I have about another 10,000 probably or so that will make its way into this portfolio. That's just cash sitting around in different accounts. So this one's pretty much fully built out, but just topping off some of these positions, in anticipation of what's to come. I think we may have only a few more weeks of this sort of sideways action in crypto, and then in October I think is when we really start heading off to the races. Maybe the end of September, last half of September, or definitely in October is when I anticipate crypto to really start to make its move. So definitely excited about that. And then lastly, just looking at the different options positions, we have the Tesla 230 calls, which are up 26%, 154. We got Shopify, 73 calls. Those expire on September 13th. Those are down 27%. Palantir, like I mentioned, we have the 32 calls, which are up 1%, 25 calls, which are down, and now we have the 19 calls, which have been rolled. Enphase, September 20th, 110 calls, which are down. These are not accurate because the rolls have not been factored in. Unfortunately, no brokerages that I know of factor in those rolls, so it's kind of unfortunate. Celsius still got the 43 calls, September 27th. Those are down. And now we have two batches of Amazon. So we have the 150 calls for November, and then the 185 calls for October. So Amazon, this is actually a really great example of, I don't just have the money to just add another, add shares in batches of 100. And so over the past, we can actually go look and see. So how do I do this? Maybe click on the actual position. Gotta log back in. Let's see what prices I bought in. It's either this or, okay, then it's the gain and loss. All right, perfect. So if we look back, I've really been adding all along. So on 8/8, I bought those last shares to finish off that round of 100, but I bought on 6/5 at 181. I bought on May 31st at 175. I bought on, you guys can see all the way down, but most of these shares are added in the 125s, 128s, and then, my goodness, we even have here, I was buying in the 83, 89, 94, 103, so I've just been adding shares all along. And, now that's given me a second round of cover calls that I can do now that I'm up to 400. Because for a while I just had 320 and then 340 and then 300 and so on. And now I'm at 400, so now I can start to, make back some of this money that I'm losing rolling these 150 calls. Because if Amazon continues, it's going to take me another year or two, to really catch up to the stock. And that's even if the stock just kind of sits right around where it is now. Because I can basically roll these calls out $5 at a time, and it takes me a couple months just to do that, to get a credit. So I'm gonna have to probably pay some debits. And one thing I regret doing or not doing was, I don't think anyone anticipated this V-shaped recovery that we got after the August 5th incident. I believe it was August 5th, but it's literally like a V on the SPY. Basically, Amazon just recovered too quickly for me. So I was planning on trying to buy back some of these covered calls because Amazon did come down to that 150 area. But, it kind of touched that 150 zone and then just recovered too quickly. So next time we get a big, fear, panic type of situation, I'm going to look into, making some strategic debit payments towards some of these calls in order to help me get back in front of those stocks. So it's one thing that I really learned during this last crash was not only focus on buying new, adding more shares, maybe buy some companies that you've been looking into, but maybe buy back some of the calls. that you've been down on, because some of these are going to take years to recover. I really wish a perfect example actually is CrowdStrike. So I had these 210 calls that were for January. I could have bought those back for probably half the price that they are now. So if I click that now to close that, is going to cost me almost 8,000. So if I could have closed that for maybe 3,000, I probably would have done it. So we live and we learn. That's all I got for you guys today. I hope everyone has a blessed weekend, and I'll see you guys on Monday. If you have any questions, drop them down below. I know this was a longer video, but I try to keep them as short as I can, and I will see you guys Monday.